Good morning, traders. Chris Bess here with Traders Profit Compass with another edition of Before the Bell for Wednesday, November 9th, 7:04 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Not a ton to go over this morning. We've got the big CPI print tomorrow. Never say never, but maybe a day of waiting and watching until that big print happens. Maybe you get a little reaction if some of these election results get finalized, but not banking on it. But there's always some volatility around if you're into trading that. So let's blast through our deck. I want to show you some stuff in the material space at the end of the deck. I continue to think that the US dollar chart is one of the most important charts that we can focus on right now. Testing support here along the bottom. I think a break there would really open up a lot of things. Commodities across the board, emerging markets. I mean, we've talked about all this stuff. I think it would be supportive of equities. And like I said, it doesn't have to crack completely. Even just a back touch of the 200 down here would be a significant move. So I'm going to continue to watch this very, very closely. TLT had an up day yesterday, but I still continue to think it's going to come down here for a little back touch of 92, revalidate that bottom, and then put in a divergent low that we could possibly get long, very objective long down here at 92. VIX popped up a little bit yesterday, just toggling in and around this pivot point at 25. Now that we've made, we made a 3-day bottom, as it were, we got to watch out for a move back up and away from 25, which would, obviously if you're long, that's going to be a problem. I continue to think if you're an active trader, you should have the dollar, the VIX, and TLT on your active trading matrix, and those will give you a lot of clues as to the stability of the direction. And when you start seeing divergences, for instance, price going up and VIX going up, etc., and TLT going down, when you start seeing those divergences, you got to really, really pay attention because something is not stable. One of them is lying. That's my point. Doesn't mean that it can't persist, into the day. All I'm saying is you'd much rather have all those occurrences align if you're long. You want to see the dollar dropping, you want to see TLT rising, and you want to see VIX falling if you're long, and that way you got all the stars aligned. That doesn't mean bad things can't happen, but at least if you've got alignment across the board on those key drivers, then you're going to be in better shape. The big drama yesterday, of course, was in the Bitcoin arena with FTX basically going under, being bought out by Binance. Breaking this 19,000 level, took a dip down almost 17,000. Now it's come up a little bit. I'll show you the weekly chart here, and you see how important it is for 19,000 to be recaptured. We have been talking about this level here for a long, long time. Going on 6 months after the last big episode of waterfall selling, and you can see that the next level below is 12,500. So unless and until price can get back above 19,000, that door is open down to 12.5 on Bitcoin. And of course, if you're into crypto, there's all these other coins that are going bananas out there if you're into trading that kind of stuff. Oil had a bad day yesterday. I'm not sure why, but lost to 200. Now we're still back in this trading range, if you will, from 88 to 94. We broke out with authority with a big impulsive bar, actually reached up to 94. Now it looks like we're coming back to the bottom of the box again. So it's going to be really important for those bullish oil and energy to hold the bottom of this trading channel and lateral support down here at 87 or so. Got a nice breakout on gold miners yesterday. We had talked about 25.5. Hopefully you had that alarmed. Hopefully you jumped on it. Now you can stay long against 25.5 with a stop below based on your tolerance. The next sticking point is going to be resistance at the top end of value, 27.5. Then we got the 200. Then we got the measured move target up to 29.5, where you see the next value range kicks into gear. And the dollar did not drop a lot yesterday. I don't know if this is a product of crypto turmoil or other factors. It really doesn't matter. What matters is we got the technical breakout, and if you were ready for it, you should be long there. Now, of course, you can go in, look at silver, look at junior gold miners, look at individual gold miners. You'll get a lot more horsepower. You'll get more horsepower in junior miners than you will in the majors. Same thing with silver. You'll get more higher beta in silver than you will gold, and silver miners are probably the most silver junior miners are one of the most volatile asset classes you can get in the mining space. And if you get it right, you'll get a lot of money, but you got to be able to stomach the volatility. And if you missed this yesterday and you want to participate, don't cuss yourself out, get all distraught about it. You missed an entry, big deal. This could easily come back for a back test of 25.50. I'd hit it there long, or it can break out of this value range and then get up above the 200, and you can give it a shot there, either at 27.5, and by the time that gets there, maybe the 200 will drift down to where those levels coincide. And so just look for the next opportunity and make sure you set your alarm so it doesn't happen again. And that's really the lesson of it. I mean, it's one thing to get your long alarm here and say, well, I really don't want it. That's fine. But it's another thing for us to have been talking about it, but you never set your alarm. And now you find out, today that it broke out and you really wanted it. The only way that's going to happen is if you set alarms and use those alarms as not an automatic buy trigger, but an automatic pay attention to it, evaluate whether you want to add another long into your mix, or if you don't have any gold, is that what you want to do? Get some exposure to precious metals with the dollar testing support. So anyways, these are the key levels. I think you're going to want some gold exposure as long as the technicals support it, and as long as the dollar looks like it's at least making an attempt to break down. McClellan is overbought. I don't like him up here to get, gonzo long. Same thing with the NASDAQ, NAMO, not as high. We know that for the most part, big cap tech is struggling. You're seeing the lag here in the oscillators because of that effect. When we go to SPY, really nothing material changed since yesterday. We're here in the middle of this trading range. I think 380 is your pivot. You can see you got the 8, 20, and 50 all below price, which should act as support. To really get this going, you got to break out above these prior highs at 390. But for active traders, you can make some hay in here inside the box. And you see these ranges here. You got the 50 at 380. You got highs of yesterday at 384, 384 and a half. And then you got resistance coming into play at 388, 390. You had a great, there was afternoon turbulence, and you got a needle bar that came all the way back to 377.50 right along this line. You can see rejection, rejection, high volume bar, support, rejection, rejection, support. So, I mean, that was a nice trade if you were ready for it. If you were holding long, you were terrified through this, and then you got the recovery towards the end of the day. But if you had been waiting and you got that little back test of this range right along that line, that was a great buy. Again, nothing really changed with the QQQs here. Where we recaptured the 8-day. I guess that's significant, and we broke above 270. I think that's your pivot. You can see here you've got the 20 EMA overhead, and you got the 50 way up above. What I've done is drop in a downtrend line off of these highs just to show you you're going to have a little multi-layer resistance overhead at around 272 where it stalled yesterday. You can see you got a high volume bar here. Support, both support and resistance. It was support here, then it fell apart, and then we came back up to resistance again. So you can use this 270 as your pivot. Just realize it may get a little sticky back up here around 272 as it challenges these prior lows and the downtrend line. And, depending on when and where you catch it, you may want to wait for that confirmed breakout above 272, and then you can look for higher ground. IWM, basically a flat day. Nothing happening. Still outperforming the other indexes. I've dropped in a little channel here. I think there's really just several levels that you want to watch on IWM. Really, for today, it's 179. Why? You got a big $3 trading range below, and you've got channel support here at 179. You really don't want to lose that. That would open the door for this rolling down to 176. You want that to hold. And then overhead, you're looking at 180 and a half and 182 as upside targets. Meta is really jumping in the pre-market. I think it's up. Actually, I can check real quick. Let's see. Trading 101. So it is all the way up here. I guess it's laying off 11,000 workers. So you're going to have a big gap below, and then you're going to have a big gap above. So Meta might offer some fruitful trading today just because of the big gap up. And, we've seen in the past when you get, is it going to be a gap and go? Or is it going to be a gap and fade, gap and crap, right? So you're going to open up here in the 101 area, and then you're going to have a big gap below to fill, and then you've got the big gap above to fill. So I would pay attention to Meta today, just for the simple fact that it's showing some, pre-market volatility and strength, and see if things develop from there. But you've definitely got some good levels to work against here on Meta. Apple, again, had some volatility yesterday. You could have taken advantage of if you were, studying it and had it on the board. You got the little breakout, but in that afternoon bout of volatility, came all the way back to 138 with that needle bar. And you can see that was the bottom of value. And, you had resistance and support through here. That acted as support. And, if you can get that needle bar, those situations where, everybody thinks it's the end of the world and it comes right into support and you can take a position there. It doesn't have to be some giant position, but just get long there with a stop below. You get the bounce back up to the top of the trading range. So today, I really think it's a reset around 140 with a upside target of 142.5, and if it can't hold it, a roll down to 138. Tesla, we went over a lot yesterday. I think 185 is your support area after dropping out of this big $25 trading range. I saw some stuff. Some guys actually posted that Elon was selling on November 4th, back in here, which isn't a surprise. A lot of selling going on, but regardless of whether he is or he isn't, we've broken support, and now the next level to really watch is 185, and it's really got to get back above this 207.50, 210 area to start, feeling more secure again. Microsoft up 0.5%, but the key thing is we broke above this 228 pivot, came back below, and ultimately held it. Now I think you can be long against 228 and looking for that all-important 235. If it cannot hold it, you got to look down below to these lows at 225 and then rolling right on down if things start falling apart. I wouldn't really expect all that to happen today, but tomorrow with the CPI, anything goes. And really, again, it's not the number, it's what the reaction is. So, even if I told you right now what that CPI is going to be, do you want to be long or short? It's still going to be a dart throw, a coin flip. You have no idea how the market is going to react. So really best to stay out of that kind of stuff and focus on the levels. And I think they'll treat you very well. Nothing happening in Amazon other than consolidation down here between just rounding it off 89 and 92. You're welcome to play that range, either buying the low end of the range and selling the high end, or simply treating this like a bracket trade where you follow price either higher out of the bracket or lower out of the bracket, depending on which way price goes. Google moved up its pivot point up here towards 89.50. You can see you've got a high volume over price bar here. You had a little hesitation here. We came down, we broke out, and found that resistance level, backed off, and now we're trying to break through 90 for 92, and then possibly 95, and then 96.50. Remember, this 96.50, that was the big breakdown. Why? Because you had this big trading range that we had been in for over a couple months, and that was the one that broke down. So we've back tested that level once. We broke down again. Now if we go back up, maybe that's a simple back test. Maybe that's a breakout and a gap fill. We'll have to wait and see. Netflix recaptured the bottom of the bracket. So if you're bullish, that's good. You can stay long against 262.50 right here at the bottom and see if things proceed. But if they don't, if they roll over, then I would imagine coming back down to these lows here. Just using those levels over and over and over again. I mean, that's trading, and that's where your skill comes in. I mean, everybody's probably got those levels. I'm not privy to anything special, but having them is better than not having them. And then it's a matter of your skill and on what time frame you want to trade around, whether it's a 5-minute chart, an hour chart, or a daily chart. It's all the same information. Here was another example of nice technical action happening in real time. We talked about yesterday morning that semis were right, at the bottom of the gap. And what often happens is the market does not give you a beautiful entry. Oh, we're moving into the gap. Let me get long. Let me have a free $5. That's so easy. No, what it does is it knows it's an important spot. It gaps above. So people that wanted to short here at this line of resistance, they got clipped, and those that were waiting for that perfect entry to get long, they didn't get that. They got denied that perfect entry. So it opened halfway into the gap, then went right up to the top, and there it stalled. And in that afternoon turbulence, what happened? Came all the way back. You see that needle bar came all the way back to fill the opening gap where if you were ready, that's as objective as it gets for a long, an opening gap. It comes back, you re-enter that gap, and you go right down to the bottom, fill the opening gap, validate that level, and shoot right back up. So that was a $5 trade in really a matter of less than an hour. So if you got that trade, that's great. So moving on to today, it's simple. 200 is your pivot. That's the top of the old gap. That's your next high volume over price bar. That's resistance. And now you got another $5 to the upside, up to 205, and then 208.50, and then we've got another gap above. And I would be very, very concerned if this were to roll over and lose 195. Why? Because then you're back in the soup again. This should all be support. Everything below 195 should be support. From going back here to here to here, all this traffic in here. Anybody who bought along these lines is profitable. And if this were to roll back over, they're going to be concerned all their profit's going to be taken away. And so that fuels the I better get out now kind of a syndrome. So moving on, ARCF, no changes right here at the bottom of the box. You should know what to do down there by now. Same thing with ARCG. Down here towards 31, had a nice little day, up 2%. You've got a level here at 32.50, high volume over price bar. You could certainly use that as a pivot to see if you can get back up to the 50 and 34.25 as the bottom of the box. Flagship fund bouncing along here at the bottom. You see you got a big line of support at 34. I mean, I think it's all about 34. It either holds or it doesn't. And you certainly know if you were wrong, correct? You know, if you took a long against 34 and it starts creeping below, there should be no doubt in your mind to respect that stop, you know, get out of it, and then reassess whether you want to be short or not against 34. ARCW, same deal. Support, prior low. We said this was going to come back. You got a tag of the prior low. Now it's all about holding it at 42. I wanted to show you Freeport again with the chart more developed, breaking out here above 35, above the 200 here, and moving into this value range. You could be a little more lenient with the level here. If you wanted to move that up to 35.50 for an entry, I think that would be fine. But just remember, when price moves in to recapture value, it's just like a box. It's just another way of saying it, that you'd expect once this resistance is taken out, you'd expect a path higher. We talked about TECK yesterday, TECK resources in the copper and materials space. Right here at the top of this high volume over price bar, you see here support, 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 a line of resistance, and now we're trying to emerge right here above 34. You can decide if and when you wanted to get long, but I think this being the high volume over price bar here, and knowing that price is above all these moving averages that are clustered, I think that's going to be a heck of a support level. And unless there's an outright collapse in copper, or the dollar goes on a moonshot, or China goes back into massive COVID lockdown mode, I think you got a really good opportunity at these levels down here to have an eye on much higher prices. Whether it gets up to 43, I can't say. You've got some resistance in here at 39, but I think that would be a good trade in itself. Over in the lithium space, I think there's a level to pay attention on this lithium ticker, Livent Corporation. we're nearing the top of this $14 wide big consolidation range. It goes back a year and a half. You get a breakout above 34. Measured move basis is 48. So I think that's something to look at. Even on the short side, if things fall apart and you're at the top of the box, you know, your default is at least halfway. You can see that's what happened last time, but your default is the bottom of the box. You know, top of the box, bottom, top, bottom, top, back to the midpoint, which is different. And now, excuse me, back to the top of the box. So I would put yourself an alarm there at 34 and see what happens. This Piedmont Lithium as well, top of a big consolidation range on the daily chart going back to August. Top, I mean, you can see the high volume over price bar. You can see there's a value range here that goes from 58 to 64. All these resistance levels, probing. You get a breakout of 64. You got a target at 72 and then 78 because you got a $12 trading range and a breakout of 64 puts you up near 78 or so. So I think that would be a good trade to at least have alarmed. I would be careful on the options on this. I don't think they're well traveled, and the spreads can be kind of wide. So whenever you see that, just be, don't be in a big hurry. Put your offer out there and see if you get a fill. And if you don't get it, you don't want to overpay, because then you're not going to get paid on the backside when you go to sell, right? Whenever those guys want to make you buy the ask, and then when you sell they give you the bid, and in a lot of cases it's just not, you can't really do it. So you see that a lot on thinly traded stock, biotech stocks that are really volatile, stocks that have a high IV where they move a lot. So what the market makers do is they blow out the spreads to give them more cover, for that volatility. So anyways, that's about all I got for today. Really, the CPI is going to drive this thing on the back half of the week. What I would do today, if I were sitting on, just keep that in the back of the mind, back of your mind as we head towards the close. Think about, how much overnight risk do you want to have on the board when that CPI comes out? Because of course it's pre-market and you'll have no chance to really react on options. Now, if you're in the futures market, that's a whole another ball game. You can, trade that as it happens, but just be judicious today, knowing you got that big macro event tomorrow. Hope you found the video helpful. If you're new to the channel, hit the subscribe button, the alarm bell. More heading your way. And if you jump over in the show notes, you'll see a link to the blog site where you can register for all my content and get everything directly to your email box, and also get an invite to our trading room. You will join other aspiring traders and be able to bounce ideas off them and get some camaraderie as we face these choppy markets. So would be glad to have you there. So have a good day of trading, and I will talk to you next time.